Hi friends, in this video I will present to you 3 high growth small cap stocks. The only humble request I have is that do not watch this video if you do not have 10 to 15 minutes of the time, because half knowledge is worse knowledge. With that, let me present you the first stock. First stock is Zen Technologies Limited. Many of you had dropped comments asking me to analyze Zen Technologies Limited, and also I spoke about this particular stock on my YouTube member community. So first thing, if you look at the chart, you will see that the currently stock is trading at around 810 rupees. But in the last 5 years, stock has given close to 1000% return. So it is a multi-bagger stock already. Why is it multi-bagger? And what is the future prospect? What is the business moat of this company? I will reveal everything. Last 1 year, if you look at it, the stock has given close to 200% returns. But more importantly, if I bring you to this chart here, and if you look at the last 6 months, after this breakout that has happened from last year, May 2023 onwards, it has gone from 200 rupees level, so roughly 200 to 290, 300 levels to almost 870 levels, right? It has now been consolidating in the last 6 months in the range of 700 to 800, as you can clearly see on the chart. So first key point here is that although the stock has given a very big breakout in a very short period of time, the investors have held to this stock and there is not a massive profit booking that is going on right now, right? Talking about the investors, let me present to you that view as well. If you look at the promoters, they hold close to 60% stakes in company as of March 2021. And if you look at from March 2023 onwards, there has been some profit booking by the promoters. From 60%, it has come down to 55%. Some of you might be worried here that promoters are selling their stakes. So is it a big risk or not? For that, what I want to do is I want you to read this commentary here. So page number 6 of their quarterly results, Mr. Girish Gupta, one of the long-term investors in this company, is actually raising this question with their management, saying that why are you selling your stakes, and when promoters are selling their stakes, is that not a very big risk? To which their management, Mr. Ashok Atluri, gave a very beautiful response, saying that if you look at this company, the company has been listed for 23 years, and in 23 years the promoters have held to this company, right? And now if the promoters are selling minor stake of, let's say, 2% or 3%, then we need to let them do that, because ultimately they are also there to make some money, right? Also, what he says is that mainly the stake has been diluted by non-core promoters, right? Now, by reading this commentary, it gives me some level of comfort that yes, absolutely, promoters are also investors in the company, and also time to time they would like to book the profits because the stock is right now at all-time high, right? So I don't think that is a big risk here. But the million-dollar question is why this stock has given a solid run-up and what are the future prospects. So first thing, why the stock has given beautiful run-up is have a look at the P&L account. What you will see is 2022 versus 2023, the revenues have gone up by 3 times, more than 3 times, right? And now trailing 12 months also is almost doubling the revenues. If you look at the profit growth as well here, if you look at the net profit, it has gone from 2 crores to 38 crores, like huge jump. And now it is looking at, from a 12 months trailing month perspective, 113 crores as well. So if you look at the compounded profit growth, TTM is 451%, compounded sales growth is 257%, and therefore the stock prices have blasted like anything. Also, if I show you the balance sheet of this company, you will quickly notice that from a debt perspective, the company has no debt. It is a zero debt company, debt-free company right now. The reserves are looking all-time high here as well. So I think that risk is gone. This being almost a micro cap stock, it is ranking at around 600 from the stock exchange perspective. So I think that risk is also gone from here. If we also look at their latest quarterly results, what we will notice is that from revenues perspective, it has gone up by 200% year on year. EBITDA margin is looking 371% up year on year. Profit after tax again is 318% as well year on year. So their latest quarterly results have shown phenomenal growth, and that is why if I show you that chart again, you will see that stock prices shot up from 700 levels to almost 880 within few days because of this quarterly results that they published, right? Now the immediate question, Rahul, you have not even spoken about what does this company do and why the profits and revenues are growing like crazy. So let me give you a quick 2 minutes commentary on what the company does. So this company has a monopoly. Monopoly in terms of what? It is into defense training solutions. So what they really do is 2 things. Number 1 is that they manufacture equipments that are used by armed forces, right, for training and simulation purposes, right? And their business segment number 2 is they also have anti-drone systems or anti-drone equipments to take care of the drones that are used for spying, right? If I simplify this even further, what you will notice here is that example of what the virtual simulation actually looks like. So here you see the armed forces are doing some practices. They are doing some trainings by using the technology of simulating a war situation here, right? Also, the second thing is anti-drone technology that this company has. So for example, here you see this equipment on the top of this truck. What it does is it keeps a very close eye on any of the drones coming around this area, and then they can take some immediate actions as well. Now this is a monopoly stock. Why? Because not many companies are doing that. In India, there is only one company that is right now doing this at a good scale, right? So coming back, this company has 30 years of experience and they have been building simulators and training equipments for 25 years. From last 5 years, they have been into anti-drone technology as well. And they're also IP player, which is intellectual property or the patents. So they have filed a lot of IPs if you go and read about this company. And also the company is exporting these training systems worldwide. What about the management of the company? So if you see page 11 of their annual report in 2023, their chairman is Mr. Ashok Atluri. And Ashok has been with this company for more than 30 plus years. So very, very experienced management is what I can see. And his one statement hit me really, really hard while I was going through this annual report. What he's saying is there are decades where nothing happens and there are weeks when decades happen, which is an extremely powerful statement because this company has been operating for 30 years, but all of a sudden this has come into limelight because there is a lot of focus by Indian government on defense sector in the last couple of years, right? And also technology has been used heavily into defense, and that is where this company is flourishing right now. By the way, I am not doing any promotion about this company. People will drop loose comments on the channel saying that I might have taken any money. Let me give you a very big disclaimer. I never promote any single stocks on my channel. That is the oath I have taken. Okay. Always I will give you unbiased analysis. So if I am liking this company, I am presenting you that analysis and I am showing you facts and data. I am not making things up. And if you are liking that analysis, a simple request you to hit the like button. Let me know in the comments a simple thank you. It will motivate me a lot to come up with such videos. Now comes the most important question, which is, will this company continue to grow the way it has been growing in the past 2 years, right? For that, let us look at page number 7 of their quarterly results. And what you will notice here is that their total order book, diversified order book is 1400 crores right now, right, as of December 2023, out of which 997 is from the domestic market and they are into export as well. As I said earlier, 440 crores of order book is from export, right? This is a very good way of diversifying as well and also de-risking the business that they've got export business as well as domestic business. But more importantly, they are sitting at a 1400 crores of order book. And if I look at the revenues, what are the revenues? Their revenues are almost, if I show you the revenues, it's around right now run rate of 370 crores. So almost 4 to 5 times of order book is what they have. Can these orders be cancelled tomorrow? Yes, that is the risk people will take. That is the risk the investors will take. Nothing is deal done here, right? But if I come back and talk about how much of these orders they are able to execute, that is another important question we need to consider here. So in this quarter, what has happened recently is that they executed 98 crore worth of orders. So in my view, if the order book is so huge, 1400 crores, 98 crores of order execution is on the lower side, right? It's not even 10%. So I will question whether this order book is floated or bloated or not, right? But again, I will leave that to one side and we'll see that is the company likely to continue to grow at the rate it has been. Yes, I can see that order book is looking healthy and they are executing at a run rate of close to 100 crores per quarter as of now. So if I project that, it is 400 crores a yearly run rate is what I can see right now. What about the market size? How big is this market? And if I show you the commentary here, page 7, the company projects this market size to be around 10,000 crores. So there is a lot of room to grow for this company further, right? And this company has been in the business for 20 to 30 years, right? If I come back and talk about the biggest risk of the company here, page 8, many investors feel that competition is their biggest risk because likes of Adani, Defense and DCM Shriram Industries, they are also entering into this segment. So how long will this company hold that position? We don't know, right? And this is where I say there is no stock such as buy and forget. You have to monitor the stocks. Buy and forget stocks are lazy thumbnails that people put to attract views, right? Don't fall into that trap. What you need to do is if you're investing in stocks, you must make sure on a quarterly basis you're checking their results, their earnings presentation, and where is the company heading trending towards, that will give you a clear sign of when to exit, when not to exit the company stock, right? Now, let me also give you the view on their valuation. If you go to screener, you will see Zen Technologies has no competition. As I spoke about it, it's a monopoly stock in my view, right? But if I compare with other defense companies, you will see that right now Zen Technologies is trading at around 60 PE, and there are not many companies which are trading at below that PE, because defense stocks have been rallying like crazy. It is very hard to find a defense stock which is a good stock at 40 or 50 P. So from that perspective, it is trading at 60. From a PB perspective, it is trading at 18, while the industry PB, again, there is no industry for this company. How do I compare with other companies? But from a PB perspective, if I look at these stocks, except solar industry, which is trading at like crazy 20 PB, many others are trading at 8 or 6 or 5. So it is overvalued from a PB perspective. These are the things that you need to consider for yourself. Do not take my analysis as a recommendation. I have given you a lot of information that you can use to make your own decisions. Second stock is Infraconstruction Limited. This stock in the last 5 years have given 922% returns. It is a multi-bagger stock already. Last 1 year, if you see, the stock has given a very good run up of 161% returns. I spoke about the construction sector on my YouTube member community and did a very detailed analysis of that sector as well. People who want to consume a lot of insights from sector perspective, from stocks perspective, from mutual fund perspective, you can consider subscribing to my YouTube member community. And please only do it if you are serious about your money and your investment journey, right? Now, coming back to this stock also has a market cap of close to 8,000 crores only. 533 is the rank. But more importantly, why this stock is going nuts, right? We need to understand that. So for that, what I'm going to show you is their P&L account. So if you look at the P&L account here, you will see that after COVID, if you see the growth that they've shown is almost their revenues have doubled every single year. So from 267 to 427. From that to 961 level, and then to 1800 level. So the revenues have been doubling every single year. That is extremely important. If I look at the shareholding pattern, you will notice promoters from 65% have raised their stake to 67% as of December 2023. FIIs and DIIs both have shown good interest in the last 2 or 3 quarters. So feels like that this company is building some momentum right now. If you look at the balance sheet as of September 2023, the debt position also has been coming down, which is a very good signal for a company that is in construction business. Let me give you only 1 minute commentary about their business. So the company has been in existence for 50 plus years, and mainly a company operates into 2 segments. Number 1 is the real estate projects. So they do a lot of residential and commercial projects. So for example, if I show you Aradhya Avan, a very tall building, India's tallest residential property is what we can see here. This is in Mumbai. So they are Mumbai based construction company mainly, right? If you look at their ongoing projects, you will see that all of these projects they have done are in Mumbai. Dahisar, Juhu, Mulund, Tardev, all these are prime locations in Mumbai. So they operate in luxury segment. But more importantly, if you see this column here, completion status, and if you see the date of completion. So for example, the first one, Aradhya High Park, is going to be completed by December 25, and 97% of the flats are already sold. So if you see again December 28, 23% is sold. My point here is that near the completion date is lower their inventory level is, which is a very good sign that the company is able to sell all their flats, which is excellent. Also, if you look at their upcoming real estate projects, they have got 4 to 5 big projects lined up. One in Ghatkopar East, near Dahisar, Goregaon West, Bandra West. So they are mainly Mumbai based developer. What I also like about this company is on your screen, page number 5 of their latest quarterly presentation, and their management is saying that 95% of the inventory is sold out before the occupation certificate is arrived. Also, they have delivered their projects at least 6 months to 1 year before the scheduled date, which is excellent. And let us also have a look at the data to prove that. So page number 37, you see here, all of these projects that they have completed time before scheduled date is like 7 months, 12 months, 14 months, 20 months, which is excellent, and it is a data backed report that I can see here. Apart from Mumbai, they already have started building their presence in United States. So they do not operate anywhere else in India, but they started to build their presence in United States. Some of the upcoming projects you can see on my screen. Let me now come back to their second business segment, which is the EPC projects. So EPC is engineering, procurement and construction. So they do not have their equity invested in that particular project. They only engineer it, or they procure the material and the labor, and they construct and take their margins, right? So for that, let me show you what projects they are doing. Page number 39. If you see, they are building, for example, government residential properties such as this one that you see on the screen. They also work on developing port infrastructure as well. They also do some residential and commercial properties as well as part of the EPC projects. Now, if you look at their valuation, so for example, if you look at the PE value here, Men Infra's PE is at around 26, industry PE is at 30. So they're trading at lower PE than the industry. From a book value perspective, they're almost 3 times than the industry PV. So that is on the higher side. If I compare them with companies such as DLF, Godrej Properties, etc., you see the PE of these companies have gone crazy in the last 1 to 2 years because of the boost in the real estate. It is trading at around 90, 96. So from that perspective, of course, this is only a small cap project. It is trading at 26, which is lower than the industry PE. The growth prospect of this company looks high to me. That is why I presented this stock to you, but please do not take this as a recommendation. Third stock is the Park Hotels, and this company's IPO was released first week of February. I can't remember the dates exactly, but this IPO was oversubscribed by nearly 60 times. But more importantly, institutional investors subscribed for this IPO by 75 times, right? And non-institutional by 52 times, qualified institutional by 30 times. But the stock was only listed at 21% premium. So this was massively oversubscribed, but the company did the right thing by not listing at a very, very high premium. Otherwise, the stock would have been falling now. But right now the stock is not falling, it is going up because it was listed at a very, very reasonable premium in my view, which is only 21%. So the issue price of this stock was 155 and it was listed at 187. I think right now it is trading at around 210 level. So I did a very detailed analysis of this IPO on my YouTube member community. Let me walk you through the detailed post that I did so that you also understand what level of information I provide on my YouTube member community. So what you see here is that particular post that I'm referring to. So if I go back and read this post for you, what you will see here is that they were raising money worth 920 crores from this IPO. 600 crores is a fresh issue. And this 600 crores will be used by the company to pay their outstanding debt, which is around 582 crores as of 2nd January 2024, as per their RHP document that I went through, right? So that is great information that they are going to use this money to pay off their debt. So the company is likely to reduce their debt massively. The remaining money they will put into general corporate purposes, not exceeding 25% of this 600 crore. So all in all, that was a very good starting point to consider this IPO. I had applied for this IPO, but as always, I never got this allotment as well. So coming back now, in terms of the anchor investors, massively good response. So 155 rupees per share is what they allocated 400 crore rupees to 37 anchor investors. And in fact, that was in the news by Economic Times that they got very, very good response from their anchor investors. Now coming back here, what are the few key points that I like about this stock? Number one is that because of the Indian government spending in the tourist sector, as they announced in the interim budget or vote on account budget, was very, very good indication of this stock doing well in the coming years. In fact, the entire tourist industry will do better. Also, the recent controversies around Maldives and also our Prime Minister Modi ji promoting Lakshadweep or tourism within India, that is going to help this stock in my view. Secondly, the management of this company, if you look at Priya Paul, who is the chairperson of the company, has been with the company for 36 plus years. So there is a consistency here. There is a leadership here. There is a lot of experience behind the management team. And number three is that the company operate into luxury customer segment. It's important point that we note here because they are not targeting the small income customers here from a tourism perspective, which is great. If I look at the revenues, because of the COVID, the company did not do very well, 190 crores. And in fact, they were making losses in 21-22 because of mainly the COVID losses. The company recovered, company did not go bankrupt during the COVID time. So in fact, now it has come back to the positive PAT of 65 crores as of March 2023. And they did a revenue of 524 crores. Few key points that you can learn about this company. This is the 8th largest hotel chain in India. They have pan-India presence. Their occupancy rate is around 93%, which in my view is very, very high. Also, if you look at their revenue per available room is 5,600 on the lower side in my view. If you look at the growth in their hotel rooms, it's only 12%. So it is not on the higher side. I would have liked around 20%, 25% sort of a growth. Debt and equity ratio as of September 2023 is 1 and it is going to massively come down, which is a great news from an investor's perspective. They own 48% of their hotels, manage 44% from their portfolio and remaining 8% are leased. Net cash flow is positive as of March 2023, 16 crores. And if you look at the future growth plan here, to me, sounds like they are going to be a growing company. And that is why I like this company, because in my view, they did not list their stock at a very, very high premium given the demand that they had. But please do not consider this as a stock recommendation. I've given you a lot of analysis and I've shown you a live post that I do on my YouTube member community portal. If you are not yet a member, you can consider subscribing. I will provide the link in the description or in the pinned comments. I hope you enjoyed this video. If you did, press the like button. Let me know in the comments a simple thank you. I will see you in my next video. Until then, keep rocking.